Hi, everyone. Good afternoon. Same as before, I'm clearly not Nicole. However, I'm Val. I'm wearing two hats today. I'm an investor at Albion VC, and I'm also the co-founder of the JV Investment Network. And both are partners to the event today. Very briefly, Albion VC, we're a B2B software fund focusing on seed to Series B. And the JV Investment Network is a network for female founders and investors where we connect both through a Slack community, but also through events. However, we are actually here for Nicole, co-founder and CPO of Accelex. Accelex is an end-to-end AI-driven platform for data acquisition, reporting, analytics for the alternative assets industry. Accelex has raised $15 million of Series A last year. And Nicole has been there since the beginning, since inception as a co-founder leading on product. And so she's going to tell you all about finding product market fit today. So round of applause for Nicole.
Thank you. I do have a mic. Thank you very much. Well, can you hear me? Very good. Well, it's great to be here. What a pleasure to see so many exciting and talented and energizing women in this room. And thank you so much for inviting me to speak. I would like to talk about product market fit, but first of all, I would like to give you a little bit of background. Why am I here today, and how did I become an entrepreneur? Because I think my story was maybe a little bit more unconventional and not planned from day one. And then I'll give you a brief introduction what Accelex technology does and where we are with the business today. And obviously the main part why I was invited is to talk about how we found product market fit with our company. And please hold your questions, and I would like to keep it, as well as Susan, very interactive. And so yes, it would be great if you have a lot of questions in the end. So why am I here? So there was a life before Accelex. Very traditionally, I studied not at one of the schools mentioned there, but still at one of the leading business schools in Switzerland. So I'm originally from Switzerland. I studied business and finance. And then I started in corporate finance with a large corporate, went up the career ladder, had different positions, worked a bit in M&A advisory. And then in 2008, I started a new position in private equity. And that's 16 years back from today, and at the time, not everyone knew what private equity was. I was working for a family office, making investments in this very intransparent and unknown asset class. And thanks to Susan, you probably know now all about it, so I don't have to tell you a lot about private equity and venture capital. But I think because I was working in that space, and this is also where our company is focused, or where our products are focused, I've seen so many of the problems that existed and still exist in the space. But then, so what happened then? It's, something unforeseen happened. My husband got offered a really interesting position in London that he wanted to take. So we decided, that was probably the first entrepreneurial decision. We decided to move to London at a very interesting time. I had just come back from maternity leave, which was obviously great. That's exactly what you want to do. Leave your job that you really, really like, that was family friendly, and then move to a different country. And so I couldn't transfer within the company to London. That was impossible. So I intentionally decided to take a break, to spend a bit of time with our young toddler and to get us settled. And at that time, I hadn't thought, what comes next, but I guess at some point of time, I would have had to think about what to do next. And then I made new friends, and through one of my best friends, I was introduced to my to my co-founder, to my business partner, and he started talking about potentially funding a business in this space called private equity. But he actually didn't really know much about the space, but he knew there was not a lot of technology. And so we started strategizing a little bit what we could do in terms of technology, what are the problems, kind of like how does the space look like. And there I was thinking, what shall I do next? It wasn't kind of like something that I had thought I would ever do, is found a business, and especially not with a young child at home. But why did I do it anyway? So I think for me, it was really, like a gut feeling. Timing felt really right, even though, if I probably had asked 10 different friends, 9 out of 10 would probably have said, maybe not the best decision. Just go back to what you used to do. And obviously London is the financial center, so that would have been very easy. But timing felt right. One, I had to, at some point of time, I wanted to go back to work. And it was almost that this opportunity was brought to me. And I thought it was super exciting. And I think the other piece in terms of timing, I could also see that, I had experienced that technology in this private equity space, or which is now called private markets. It was so underserved, and there were so many opportunities. And so, yes, I kind of like thought, why not? And then the other key drivers were really, I could bring something to the table that was extremely valuable, and I could see, because I had this hands-on experience, I had seen so many different private equity funds, VC funds. I had really this first-time knowledge. What are the pain points in that industry? And then I think something Susan now laid out is this, how do VC think? That's something, maybe it's now more accessible as it seems, but at the time it wasn't. But I had sat on the other side of the table of so many VCs, at the time mostly US VCs, there weren't that many in Europe, and I knew how the VCs were thinking, what Susan just laid out. And so I could see a path of, what do they look for in a company, and how can you make it a success? And then fourth, it's fourth, but it's probably one of the most important factors is, I think for me, team is really important. One, that I work with someone that I really like. But then also in terms of with my co-founder, I think we had really the right mix of skills and backgrounds coming together. He came more from the tech side, he was an entrepreneur before. He had built a business that he successfully sold to BCG. So he also had this consulting background plus data background. So it just somehow everything came together, and it was almost like, a sign that I should get started. So I did. And yeah, since then, I haven't looked back. In terms of company that we built, it's so we are a B2B fintech business, so meaning that we only sell to enterprises. We are a SaaS business, and we started with the ambition to transform the alternative or the private markets industry. This is really true from the beginning. We have really, our technology is powered by AI, machine learning and data science. It's not just a marketing message, it's really true. And when we started in 2018, that was actually quite a difficult task. It wasn't super easy, as Gen AI and all these advanced technologies weren't available yet. So yeah, that was something I will talk a little bit about later on, how we found product market fit. And then in terms of product that we offer, I think Val already introduced it a little bit. But what we do for our clients, we focus on private equity fund investors or any private markets fund investor, and we help them automate the collection process of documents because it's still extremely unstructured and painful. We help them extract data from various investment reports that they receive on a regular basis, which is either they don't get the information in a structure format at all, or they have to put hands on keyboards. So we automate that process, and then finally we help them actually understand their investment performance with our analytics suite. We were founded in 2018, launched our product MVP in 2020. I will talk a little bit about that whole journey later. We have over 40 clients now, which doesn't sound that many, but because we're B2B, our clients are really either large pension funds, large asset managers, or large asset servicers that use our technology to provide a service to their clients. And in terms of fundraising, we're backed by 4 different VCs. We also when we completed our Series A, we had an institutional investor, one of our clients, leading the round, and we raised $27 million to date. And so it has been an interesting journey, and we are now on the brink of really scaling our business and on a good path to profitability. And just one more thing about our company that I would like to leave you with. So this is a picture of our 75 employees. After completing the Series A, we finally had enough money to bring our whole team together because we have quite a few different offices. We're actually based in London and North America. And so we could bring everyone together to celebrate this special moment because without this amazing team, we wouldn't be where we are today. So I wanted to leave you with this as well in terms of company introduction. So how did we find product market fit? Maybe first of all, I think this is quite a good quote, and it's from one of the, from a very seasoned investor who has backed thousands and thousands of companies, very successful companies, investing in the very, very early stages of in startups. So he says that the most common mistake startups make is to solve a problem no one has. And I think that's something, even though I didn't have that quote, I think just by having sat on the other table and listening to all the VCs, what kind of investments they made and why certain investment failed, I think that's something that we had at the core of our thinking from day one. If there needs to be a problem, or we were very focused on client problems that we wanted to target. The actual product fit, what is product fit? That was a concept socialized by Mark and Reason many, many years back, and it does say being in a good market with a product that can satisfy that market. What does it say? I guess you need to have an overlap between market and your product. If there is no market, it does not matter whether you develop a product that is amazing and has the best features. If there's no one that actually is willing to pay for it, your company will fail. And even though, again, we probably didn't really know that concept or weren't so focused on this concept from day one, we had this very much at our heart. So how did our product our product history look like? As I mentioned before, we were founded in 2018. So we bootstrapped ourselves initially to develop a POC in 2019. How did we start? So our thinking was, or how did we get started? I think the market question for us was key. We did, because of my background in terms of private markets and my co-founder's background more on the tech side and the capital market side, I think we had a pretty good understanding combined, or had an idea what kind of product we could create. But then we were extremely focused on speaking with as many prospects or target clients or participants in this whole ecosystem, because we had an idea and we wanted to digitize, or we wanted to actually automate this whole data collection and data sharing process. But then we also needed to speak with those prospects, whether that's at their heart, is that really one of their top priorities. And I think that's something that we did very early on. We were very client or prospect focused, and we were very focused on what kind of problems that they had. And so for the POC, we worked with a few early adopters. That it was very minimalistic, and so yes, we did use data science, we did use machine learning, and hence it was actually quite a complex problem, which we didn't anticipate at the time. What did we try to do? We had one document type that these investors get each quarter. It is very long and it does have a lot of data, but we didn't think it would be so complex to actually automate the data collection process. But it was. So it took us fairly long to get a POC to the market, but then, kind of like socializing it with other prospects, we saw this is really something that can fly, and that there was a lot of demand and from other clients. And then based on this, and yes, we did then raise an angel round because we couldn't bootstrap ourselves anymore at this time. But we wanted to finance, or we wanted to continue to an MVP. And again, great timing, COVID just struck, and so we were there. It was, we were working towards our MVP, working with our early adopters, and so suddenly we had to do everything online. We couldn't sit down with them anymore, which was, it was a little bit different, a different communication, because we were working so iteratively and so closely together. But we were successful, so we signed our first clients a few months actually after COVID struck in June 2020. And from there on, we kept, again, working in a very iterative way with our early adopters, with our early clients, to get feedback on what kind of improvements, or what kind of where the MVP wasn't really solving issues that they had. Based on this, so the MVP was literally a tool or a technology that they could automate the data extraction from one document type, which was worth a lot to them, because it did take them so long to extract that information manually. And from there, these clients then came and said, oh, we have another problem, that we have other document types that are very painful to get data, so that we actually know how our portfolio is doing. So we said, okay, let's do that. So we extended our technology to other document types, and then they came with another problem that they actually couldn't. They had to manually access all these documents coming in all the time from different data portals. So that was our second product. We automated this data collection and the categorization process. And then, some of our clients didn't have, or they literally had that data, but then where would it go? It would go to Excel, or they couldn't really use it in an elegant way. So our third product we launched then in 2023, so that they could actually analyze the data that they extracted. And so we are really bringing, with our technology, we're bringing a lot of efficiency, but we're also providing investors with more transparency into their investments, because many actually, they didn't really know how their assets, so I mean, thinking from a VC perspective, they didn't really know how their companies were actually performing, because they would read the report, but then they couldn't look at it across their portfolio. So that was in 2023, and based on that, we raised our Series A round late 2023, which was, the market wasn't as easy anymore. Definitely not for Series A, but so we successfully closed the round, which was great. And now our focus is going a little bit away from just product focus. So we're more thinking in terms of what kind of solutions do we actually provide for our clients? So that can be a combination of our various products, but then also we have some service components that we're thinking about. So yeah, we are now at the brink of this milestone, and we do have 3 products. We now definitely want to scale. I'm curious to hear more about kind of like the going to market strategies, and that's always interesting. You can always learn from other entrepreneurs. But yeah, so this is really the next phase. We are working on our 4th product, so that will be exciting too. So we're using part of this money to launch our 4th product, which will be more in the benchmarking space, but a logical extension to our analytics suite, since we do have so much data on this very intransparent asset class. So yeah, this is just a little bit of an extract. I think I really want to leave you with, it's important that you know exactly what your market is. I think it's important that you invest, and I think that's something, when you want to pitch to VCs, I think the total addressable market is always, the higher the better, and usually the easier it is to get funding. So we did spend a lot of time, what does the market look like? What's the growth perspective? So I think it's a lot easier to be in a positive environment where you see a lot of growth. And the second point I would like to leave you with in terms of product market fit, I think it's so important that you're close to the prospects, close to the market participants, that you really understand what the pain points are, so that you can provide them with a solution or with a product to solve their pain points. Because again, if you're not solving a product, your company will most likely fail. In terms of, I thought I'd close with what were the biggest learnings along the way, and it's not necessarily just in terms of product market fit. I think generally, we started strategizing in 2017. We founded the business in 2018. We're now in 2024. We had a Series A. So it is a long journey, or it can be a long journey, and it's definitely, it's not a straight line. I mean, there's lots of up and downs. I like this, this picture. So that's a day in the life of an entrepreneur, but it's a month or a year, right? There's so many up and downs, and I think, it really teaches you to become or to be resilient, because one day you think you cracked it, the next day it's one of your early adopters suddenly doesn't think the client wants to continue, but then you found a solution to keep that to keep that prospect alive. And then, but you find out, actually the technology, something doesn't work. It's So it's lots of up and downs, and I think the longer the journey, you will have very different challenges. But I think generally, you can definitely learn a lot. Even if you fail, and I think we definitely failed in certain parts or we had some learnings along the way. So I think it's a great opportunity to learn as well, especially from when you kind of like have one of those rock bottom or more bottom experiences. I think the second piece that is really important is that you get the market timing right and that you understand the market and the pain points. So I think even if you I just want to give you an example. So even if you understand pain points, if you try to, we were thinking initially we wanted to digitize this whole data exchange, but then we also understood, because I'd been working in that industry for so long, that wouldn't fly with the ecosystem. So you also need to make sure what you bring to the market is actually that the market timing is right and the market is ready for that type of solution, because it might also be too early. And then third, really important, surround yourself with a diverse team, and ideally, those people should be smarter than yourself. And I think, it can be intimidating, but I think that is really, it's also very fruitful, and it's quite, it really helps the business, obviously, and it challenges yourself all the time. Other points, which I alluded to, try to be very close to your prospects, to your customers, to whom you want to sell, because you need to understand, one, what are their problems, are they willing to pay for it, and then how much are they willing to pay for it. And I think this is just very important. And for us, it turned out that it was also, we worked so closely with our customers, and we still do work very closely with all our customers. And they did throw so many other problems at us when we could successfully solve the first one, that it kind of like guided us in our product journey as well, and in our company journey. And the last one, I think generally just stay agile, right? It's things change all the time. Also in product market fit, it's not you do it once and you're done. Competition comes, it's the market environment is moving constantly. So it's really a continuous process, because the situations can change in the market. You have other competitors. The needs might change, so you really need to be agile. That's it. Thank you so much. I would love to have some questions.
Hi, thank you so much for your presentation. I have a question about staying close to your customers, especially for a B2B company at the early stages. How do you get access to those customers and get feedback? Is one or two enough? And then even if one or two is enough, how do you get them to provide continuous feedback? Everyone's time is precious. Why would they tell you? And why would they engage with you?
Yeah, you might not necessarily need 100 of early adopters, but I think you need to understand is if you only have one or two, is that really reflective of a larger group? So hence, I think that the work on really looking at what is the market, how large it is, who are these market participants is just extremely important. And how do you stay close to them? I think, how do you get access to them? That's always difficult, right? Potentially you have a network. So I think for us, it was quite good that we had, we did have a network, and I had, as I was working in the industry, I knew quite a lot of, other investors into private market funds. And then why do they give time to you? Because they have a problem, and they have an interest that you solve their problem. And so that's why they're willing to give their time to you.
Thank you so much for your presentation, very insightful, and love the vulnerability that you've shared in it as well. I guess building on that question as well, I think when you're particularly very early on and you have maybe just a handful of people you're talking to, customers, it's very easy to focus on one particular use case. Mm-hmm. So how do you, the mistake that I've seen before is that you fall in the trap of building a bespoke solution for one particular client because you believe that that's going to solve the problem.
Yes.
How do you make sure that you solve a universal problem as opposed to a single company problem?
Yes, I know, and I think that's it's also a tricky balance because these clients they throw a lot of stuff at you or a lot of problems at you. So yes, you need to filter and you need to make a decision on what do you think is replicable and what do you think others actually also, is a problem of one client just, does it just speak to that client, or is it, a broader market problem? And so I think that's really important. And I haven't mentioned that, but it's actually a good point. I think because I knew the industry so well, I think I was really aware, where it makes most sense to also spend time. And we stayed extremely focused, and we didn't, I think we were very focused on one, on our product and our vision, but continuously really iterated with our clients. But then we also said no to a lot of things because otherwise you custom fit something for one client that is not replicable. And I think this is really important, that you can say no. But I think it goes back to market understanding and to really, I think to understand that this is not just a problem one client has, but it's replicable. Thank you.
Shall I go? Hi there. Hi there. I run a B2B2C platform called Hostology, and we've been working towards, we think, almost product market fit. But one of the big challenges for us is when you launch a second product, third product, how do you price it? So because especially when you've had a lot of help from clients who've helped you iterate on the problem and focus on trying to solve what they're actually doing with your product.
Yeah.
And then you kind of go, oh, and now we want to charge you extra for this, or we want to add this new feature and it's going to be this. So do you have any insight into how you came to those conclusions, or when you launched your second, third, fourth product, or second, third product?
Yeah, I think pricing is always a very difficult, it's always a very difficult question, right? How much is your product worth? And it's worth as much as somebody is willing to pay almost. So I think it's also a little bit, you need to find what is the right pricing and how much is someone willing to pay in the early days. Now we do have a pricing model, but it took us a little bit of time. And so in terms of what we did, because we had an MVP and we had clients paying for the MVP, and our contracts are SaaS contracts, so they're 3-year contracts. So what we did, we increased the fees over 3 years, so we had step-up contracts in terms of pricing, so just to reflect product development. And for your second question, so we did price separately for the other products. I don't know if that helps you. But we did have, we then priced separately, but we also gave them certain incentives if they bundle, a few different products together. But I think, again, our first product was then a lot more mature, whereas our second and third product are a bit less mature. So we're still, in terms of pricing, I think we're a bit firmer now or more, we know a little bit more, or we definitely know more how much clients are willing to pay for our second product, but then our third product, we still, we're also still a little bit in that phase. What is the right price?
Thank you.
2 more questions.
Hi there. Just about. Oh, sorry. Do you want to go? Oh, thank you. Just about team building. Do you have any tips for attracting talent whilst bootstrapping, or was that something that you were able to do after investment more?
That's also a very tricky question because, it's in terms of business, you are always short in cash. It's, you literally invest all your money into your business and into your people, but usually you can't pay them as much and not in cash as you would pay somebody else. So I think, how was it for us? So I think because my co-founder, my business partner, and then we have a third business partner that came in a little bit later. They had the business together, so they had a few former employees that they brought in, which was super helpful. And they were an amazing fit. And so you just need to find other incentives for people to want to be part of it. But somehow for us, it wasn't really such a big problem to find talent. It's more, do you find the right people that also fit your organization, I think. But we found, because our early hires were then more in were tech, more tech focus in terms of data science, engineering, and these people just really, or these employees really loved it. It was just a really interesting problem for them to solve. And I think they also enjoyed working for for a very young startup. And when we then raised seed and Series A money, you can obviously also let them participate with options. But I think we haven't had a lot of also of fluctuation, but HR is always is always an interesting topic. But I think it's by offering them an interesting working environment and an inspiring working environment and just an interesting opportunity, because I think also it really matters what they do, especially in the early days, right? We have now 75 people, but we were so small initially, right? We didn't always have 75 people. So I think it really mattered what they did.
Hi. Thank you so much for your presentation. I was kind of wanting to build on some of the questions that were at the start of the question and answer session, which was about specifically kind of how to prioritize what exactly you're going to build next. And obviously listening to customers is super important, but there's that famous quote, I think it's from Henry Ford or something, about like how if you'd asked customers what they wanted, they would have wanted a bit faster horse. So the question for me is kind of, how do you juggle that, the innovation that kind of comes from your market expertise with what your customers are saying and what they want for you to solve specifically for them?
So yeah, we really shied away for any custom fit products for one single client, but I think that wasn't such a big topic for us, because we had to say no to certain things, but in terms of what clients wanted, there was so much overlap, and in a way it was so logical what we would do next. So I think that wasn't, and maybe it really had to do with me understanding the space so very well, that it was kind of clear what we would do next. So yeah. Don't know, but it is a tricky one. It is a tricky one. I mean, we see it now also, right? It's like some clients, they want certain custom output, and like how far do you go, and what can you actually do, and then at some point of time, what makes sense.
You're kind of looking for the patterns.
We were really looking for the patterns and kind of like the overlap across our different clients, and even though we have different client groups, so we have one client group is more direct investors, but then we also have partners. So there it's definitely a bit more challenging in terms of, because they then have their own product offering with their own clients. So that is can be a bit more challenging. Yeah.
Thank you.
Thank you.
One more time, guys. A hand for Nicole. So we're going to do another 10-minute break. What we've got next is Dimple, CEO of Nature-Metrics, was previously the CEO of Truva. You might have heard of Truva before, which raised $40 million. Nature-Metrics raised over $10 million. You've learned all about product market fit. What is the right product that customers love? Is it a big enough market? Dimple's going to demystify go-to-market. How do you find customers and do it in a cost-effective way? So enjoy the break. We'll see you in 10 minutes.